Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Oil prices settle higher amid supply concerns heading into winter. United States emergency oil stock fell 8.4 million barrels to 434.1 million barrels in the week and September 9, its lowest level since October 1984, according to data released on Monday by the United States Department of Energy or DOE. United States President Joe Biden in March set a plan to release 1 million barrels per day over 6 months from the strategic petroleum reserve to tackle high United States fuel prices, which have contributed to soaring inflation. The Biden administration is weighing the need for further SPR releases after the current program ends in October. Energy Secretary Jennifer Granholm told Reuters last week. Global oil supply is expected to thin further when the European Union embargo on Russia's oil takes effect on December 5. The G7 will implement a price cap on Russian oil to limit the country's oil export revenue, seeking to punish Moscow over the invasion of Ukraine while taking measures to ensure that oil could still flow to emerging nations. The United States Treasury, however, warned that the cap could send oil and United States gasoline prices even higher this winter. NL1 and 3010 BQ. The Executive European Commission is due on Wednesday to unveil a package of measures to help power firms facing in liquidity crunch. France, Britain, and Germany on Saturday said they had serious doubts about Iran's intention to revive a nuclear deal. Failure to revive the 2015 deal would keep Iranian oil off the market and keep global supply tight. In more bearish news for markets, China's oil demand could contract for the first time in 2 decades this year as Beijing's zero-COVID policy keeps people at home during holidays and reduces fuel consumption. The lingering presence of headwinds from China's renewed restriction and further moderation in global economic activities could still draw some reservation over a more sustained upside, said Jun Rang Yue, market strategist at IG. United States domestic oil output is also set to rise in coming months. Oil output in the Permian Basin in Texas and New Mexico, the biggest United States shale oil basin, is due to rise 66,000 barrels per day (BPD) to a record 5,413 million BPD in October, the United States Energy Information Administration or EAA said in its productivity report on Monday. The European Central Bank and United States Federal Reserve, meanwhile, are prepared to increase interest rates further to tackle inflation, which could strengthen the United States currency and make dollar-denominated oil more expensive for investors. A strong dollar would serve as a reserve correlation to commodities priced in dollars, and would likely serve as a drag on upside gains in the energy market, said Bob Yauger, director of energy futures at Mizuho. Oil slips on demand jitters ahead of United States CPI OPEC report. Investing.com oil prices fell in copy trade on Thursday as traders feared more headwinds to demand from COVID lockdowns in China, with focus now turning to the OPEC's monthly outlook report due later in the day. A series of COVID lockdowns in China, the world's largest cocoa importer, have spurred a severe decline in oil imports to the country this year, threatening to turn China's oil demand negative. The latest sign of trouble come as travel restrictions in several regions disrupted China's autumn festival celebration, which usually spur a spike in road travel. I think that's all from me. Don't forget to like, comment, share, and subscribe.